Hello, investor. Wish you a very happy new year and Merry Christmas. So the purpose of today's video is little different. Most of the times, most of the videos which you will see on YouTube or even I make are more around what is interesting in the market, what company looks good. But rarely we talk about the other side of the market. What are the risks? And when we analyze companies, out of 2000 companies, most of us, we choose some good 20, 30 companies. But why we end up rejecting the companies or why we find certain company very risky, we spend very less time on that. And this video, actually, it was a video which I made for my community, but we got a lot of requests to have access to this video. So that is where I have created an edited version because the actual video is very, very long. And we have taken recent example from chemical sector because everybody is expecting chemical sector to make bottom. Everybody is expecting the same kind of bull run which we had in chemical sector 2 years back. That kind of bull run will come. But when I started analyzing this sector, I found the businesses are very, very different, very, very complicated. And there are a lot of nuances in these businesses from what general people think. So, of course, looking at my old videos, you will know that I myself, I have investments in this sector. I do like certain companies in this sector. But also I wanted to highlight it that how important it is to understand the nuances of companies in this sector and what kind of big risks and uncertainties could play out, and we may not be aware of it and it might lead to wealth destruction. So that is the purpose of this video. Standard disclaimer, we are going to discuss certain companies. I am holding a small tracking position because I wanted to study this company in detail. Please take this video as a case study to understand the risks and the uncertainties and how to analyze, how to build perspectives rather than a buy or a sell decision or not to buy it. So usually how businesses are perceived, I'm giving you a hypothetical scenario, which is actually the real thing for this company. So imagine 2 years back, the chemical cycle is up and you get a one-page research report suggesting to invest in a business which has following characteristics, and these are real characteristics. Monopolistic business with 40% market share, company being the #1 manufacturer in that chemical. Decadal bull run opportunity in this sector, as per stock market experts, it was there in chemical sector. Huge opportunity as 50% of the market is covered through import. So I also myself had told many times, import substitute looks like a good opportunity to play in chemical. And the segment, the product in which this company is there, 50% of the product is still imported, which means there's an import substitution opportunity. Specialty chemical business with long runway and growth opportunity. So this company also had a part of business tagged as a specialty chemical business, by which everybody thinks that these are great businesses, good growth rate, good margins and all. Huge capex story to unfold in coming years. So almost a 900 crore of capex was put in place for a company which I think at the peak of bull market at chemical cycle traded at, had an asset of almost, I think, 3,000 crore or something. So almost 33% kind of capex and a deleverage balance sheet taking place. So in last 2 years, this company has deleveraged its balance sheet. So, and huge growth in last few years. If I show you the numbers, this was the kind of growth in last few years. 3,000 crore became 6,000 crore and company totally deleveraged. So let's say if you would have looked at 2 years back, and this session, I want to keep it interactive because I think I myself, I'm going through a lot of learning. And I think if I ask you these questions, what comes in your mind, and type or unmute and tell what is your understanding if 2 years back, this is what you would have seen. Let's say, does it excite or, any thoughts on this? Excites, very exciting. We all look for monopolistic company, 40%, 50% market share. Numbers are doubling, balance sheet is deleveraging, import substitute opportunity is there. So yeah, everything looks good. And when everything is going great, we never think about risk. Certainly worth studying. And you can see these are the numbers for FY22. Now let's look what happened actually to this company. And I wonder if we had that time, if we would have invested, what we would have done. But this is where the world of equities. Now imagine you trusted on all of this and invested 2 years back. This is where the stock from 2 years back, September 20, October 21 to December. Here we are from 820 rupees, actually at a low of 350 rupee, and now we are at around 460 rupee, which is almost a 40 to 65% correction after 2 years. A lot of now you see a lot of crosses on the chart. These crosses are basically we have built our own proprietary indicators on TradingView, and we have kind of integrated some of our tools, Simba, along with TradingView, which helps us to gain a lot of information about caution or opportunity signals in the market using these indicators. All these indicators are part of Practitioner plus Simba offering. So if you're interested, you can look at our Practitioner plus Simba offering. Also visit the Practitioner page and the Simba page to know more about these products. So when all of this was so great, why did it happen? Now, let's say it's not over. Let's say you invested, but you are a great investor. We all go through conference calls, transcripts. So what if you would have, or if we would have invested, and maybe we would have tried to go through the con calls, try to understand what is happening in the company. Now, this is what management says. And again, I'm telling, I don't think it's a management which is bad. My understanding of going through multiple con calls is you will find rarely managements who are highly conservative. Entrepreneurs by nature, they are optimistic. I don't see any kind of, dumping or that kind of mentality. And I've seen many companies doing it. So just take it as it is rather than building a point of view. My saying is any management, you give them some discount. That is how it works. So January 22, and again, see the charts. This is where we are in January 22. Everybody please be on mute. So January 22, there was an analyst who was asking what kind of EBITDA margin should we kind of run with short to medium term for our company. They said we have achieved EBITDA margin of, please be on mute, everybody, please ensure you're mute. We have achieved a EBITDA margin of 24% for the quarter and year. Whole around it is 21%. I think last year also it was close to that. We would refrain from giving any specific guidance going forward. I think somewhere between these two levels would be reasonable. So they're not giving any guidance, but still they're telling it should be somewhere between 21 to 24. This comes April 2022. And in April 2022, this is after 3 months. After 3 months, this is where April 2000, the price has come down already to 480 from there. While there are some short-term challenges, particularly arising out of lockdowns in China, the outlook on our product portfolio remains very positive. The domestic market for suspension PVC is steadily growing. So demand is growing. The operating rates of paste PVC resin are expected to remain high on account of healthy demand and capacity addition not keeping pace. We expect our performance to continue to benefit from supply tightness both on paste PVC and suspension PVC. Those who track the business by this time, you would have known the company. Yes, Chemplast Sanmar is the company. Okay. So this is the guidance we had in Jan 22. This is the guidance we had in April 22. And then look what happened in FY 23. The revenue fell from 5,900 crore to 4,950 crore. The EBITDA fell from 1,200 to 468 crore. A 21 to 24% EBITDA margin business came down to 9%. And the PAT fell from 649 crore to 152 crore. If I show you FY24 number, Q1, the company has gone in losses. This EBITDA margin has come down much lower. So even if we follow con call, and it's not about margin going from 24% to 17, 18%. You can see the kind of deviation you have. So one, do not trust anyone in the market except margin of safety and risk management. I get astonished, and in bull market, all momentum, everything works. But at least in last 5 years, we have not seen bad markets. That is a big problem, actually. I see that creates a lot of uh, complacency. So the only thing which works is either margin of safety or risk management. If you are a fundamental investor, you must be sure about the real numbers. So any company which is coming with IPO, that is why I say that itself is a risk, because you don't know the history of the company. We need at least 6-7 years of number to make anything out of the margin trajectory and all. Or the risk management, you have a stop loss in place. It went. I mean, who would have thought that a 21% margin, and this 20% margin business was for a decent period of time? Who would have thought that will come down to 2%? So maybe cut position slowly, and if it is not coming up on charts, just exit. Of course, valuation was another reason. If valuation is also poor and chart is also poor, then your margin of safety, risk management, everything is telling maybe reduced. So now the other thing is, we all are eager to know the perfect life easy. Chemical में कब bottom बनेगा, ये stock क्यों नहीं भाग रहा है, ये क्यों नहीं हो रहा है. However, I'm telling what management said and how wrong they have gone. So when managements, they don't have answer, how many times we will have answer in complex sectors. Yeah. So now all of that bad thing has passed and business has gone through the worst. Why it has happened is, so thanks for the question. I'll highlight it in an opening comment. This is post the Q1 result, Q1 FY24 result. Demand for both suspension and paste PVC continue to remain very strong in India. So, we all look for demand story. This industry is expected to grow at 15%. Huge market size opportunity, but still these things can happen. So all this, when the margins have gone negative, prices has fallen, demand has remained strong. So management is not wrong in telling that. And this is a very good sign. The disruption in prices are largely do with imports that are coming mainly from China, and that has started slowing down. And the prices have also started reversing. The demand continues to be healthy. So looks like, okay, bottom ban raha hai, prices up, slow down ho jayega, import ruk jayega. Maybe when you see a reversal on chart, you will feel, okay, everything is going well. 3 months down the line, look at this commentary. The top line was flat while EBITDA was back in the black during the quarter. However, import of both suspension and paste PVC witnessed an increasing trend towards the end of Q2 with heavy arrivals from China. This trend has spilled over to Q3 as well, resulting in some correction in prices in October. We expect PVC margin to, in 3 months, management view itself is changing. And why it is changing? Because it's a globally complex world in the chemical sector. What China does, kisi ko pata nahi rehta, and what they do, that impacts all this industry. So when management itself, they don't have any clue, and they are mere commentators of what is happening. And what is happening may not be a permanent trend. It can be a zigzag, it can change. Then who are we to form an opinion कि ये हो जाएगा, वो हो जाएगा, ऐसे हो जाएगा, वैसे हो जाएगा. So in complex sectors like chemical or pharma and all, promoters can also be mere short-term commentators of what is happening around the business, rather than having some kind of great clarity. In short term, everybody in short term is as clueless as investors. It's just that the information which is flowing, they are getting the first information, they are passing to us. But whether that information is an insight which is permanent, nobody knows. It just keeps on changing. That was not the only instance when management went wrong. This is again from January 2022 conference call. Somebody asked about possibility of anti-dumping duty, which is expiring. So there was an anti-dumping duty which was there on PVC for multiple years, from I think 14 to 19, which was again extended for 2 years. And then it was expiring in February 2022. And somebody had asked, is it going to impact us and all? This was the reply. The anti-dumping duty that we have is on 2 countries, which is basically US and China, which ranges from 2 to 10%. In case of US, 4 to 10%. This China has actually converted into percentage. This is expiring. We do not expect any great impact because there is no impact really largely, because as for US is this, US is not competitive. China is concerned here is, again, we do not believe it is going to be a threat. The way these things normally work is that whenever there is an anti-dumping duty in force on a specific chemical, for the company normally reduces, it tries to factor in anti-dumping duty and the other one. So basically the crux was, we don't see this as a threat. Look what has happened in October 22. The top line was flat because of heavy anti-dumping duties from China. And your margin went from 20% to 9%. So the fact is, higher the risk lever and complexity and higher the uncertainty, more clueless everybody is, including promoter. I don't want to make a comment whether he painted his company in a great picture or he was honestly wrong, whatever. But we cannot just trust on con calls or what managements are telling, especially industries which are complex, which are globally connected, where things are not even in the hands of management. So after all of this 50-60% correction, all 9% margins, still we all are like, bottom to ban gaya hai, bottom ban gaya hai, can we buy now? So now let us try to understand this business. What is this business? What went wrong and what may happen? So basically this company is into chemicals, and in chemical, there are two types of things they are into. Suspension PVC, which is more a commodity. And then there is something called a paste PVC, which they call specialty chemical. They're also into custom manufacturing in agrochem and all, which is again comes in specialty chemical. So this they themselves, they call kind of a separate business, which is a high volume, low margin business. This for them is a specialty business. And all of these where partly this is used for backward integration as well as for selling. They call it non-specialty business, which is caustic soda, hydrogen peroxide, chloromethane and all. This is their business. These are the capacities and this is the current capacity. And I spoke about a massive capex which is happening and monopoly. So paste PVC is a monopoly business where 55% of supply comes domestic and 45% of supply comes from international. Out of that 55% domestic supply, this company does 80% supply, which means almost 40% of demand. And that is why it is a monopolistic business and they are the only player. So they call it specialty chemical business. Suspension PVC is a commodity business. I think Reliance is another big player. So they were humongous, huge capex of almost 900 crore only in specialty, which means there was expectation that it will help to lift the margin and all of that. So this capacity is supposed to, and this has gone live in September. This has gone live from 66,000 to 107,000. And the custom manufacturing will go from 1,068 to 4,500 in respective quantities, metric ton and whatever. So you can go in terms of this is a 70% expansion and this is a 4x expansion, which will happen in two phases. They're not putting new money in these businesses, commodity businesses. What happened? What has happened? This top line of 3,900 has gone down to 2,572. This top line of monopolistic business of 1,027 has gone down to 490. And this non-specialty has gone down. So monopoly की ऐसी की तैसी हो गई, specialty chemical की ऐसी की तैसी हो गई. Why did it happen? And a lot of this data is not available. They don't disclose the data on the breakup of specialty. It took me a lot of effort to go through almost 10-12 con calls to understand what is happening in the company. So I could find all the data in terms of capacity, in terms of utilization, did some kind of triangulation. And this is what, this is for 1,000 kg. So on a per kg basis, suspension PVC was trading at 130 rupee per kg. That has gone down to 76, which is okay. This is a commodity business. But the monopoly business, which is in specialty, from 156 rupee per kg, this has gone down to 63 rupee per kg. From 63 rupee per kg. So basically the prices have crashed. But this was also not sustainable. If you'll go, because the company itself came in IPO, and that is why I keep telling, when there's a less history, that itself is a risk. But if you try to go back in time and study, you will realize these prices were more realistic. And this was again that COVID phenomenon, which was a lifetime kind of thing. And Jack keeps telling what time kabhi wapas nahi aane wala hai. These are numbers which highlight why what time kabhi wapas nahi aane wala hai. So this is what has happened. Now, why prices crashed? So management says that China dumping nahi hoga, but this is the kind of China dumping happened because China dumped big time. Monopolistic business doesn't matter. Globally, China has 40% of capacity of paste PVC, which they were using for their own economy, own country. And when the own economy went in bad shape, they started dumping. So why it happened? So then you need to see where paste PVC is used. Paste PVC is used highly in construction and real estate segment. Look what has happened to China's real estate index. China's real estate index in the last 2 years is down by 83%. And we know about the bankruptcies which happened in China with some of the biggest real estate companies, which means indirectly the demand for paste PVC, which was coming from Chinese construction sector, has taken a big hit. So somewhere the Chinese suppliers need to dump and they're dumping in India. See, this is what a globally connected supply chain risk is, and this is how it can play. So it happened, prices crashed because Chinese dumped because Chinese real estate crashed, which is a key user of this commodity. Now on earth, do you have capability? So when you say कि bottom कब बनेगा, ये बता दो, वो बता दो. Do you think anybody has capability to predict exact level at time at which China real estate demand will bottom out? If somebody can do that analysis sitting in India, he will rate of what will happen. So the business can revive. My understanding is this business can revive in 3-4 ways, which are: one, the Chinese real estate recovers and hence the dumping stops. The moment dumping stops, supply gets lesser, prices start stabilizing and going up, or prices stabilize with no further damage. So I am not telling you the good parts and all, there is a lot of it, but there is one more discussion and I don't know if that will play out or not. So there is a commentary where management says when prices are declining, we are passing that pass through with a lag. So we keep buying raw material at a higher price and then the final product price goes down. So there is a gap. So that is why we are suffering. It will go up. Then we will get raw material at lower price and we will settle at higher price. So we'll get benefited. But what they're telling, even if prices remain stable, then we will not have that kind of lag. Our business will be much more stable. I don't know how much money I think that depends. It's not just about prices being stable. And I'll give you example. I try to do some numbering. Let's say the price is 100 rupee and let's say hypothetically raw material 17 rupee and management power cost is a huge cost. Salary cost is 20 rupee. Then you have a margin of 10 rupee. If prices crash to 50, your fixed cost is not going to decrease. So still you have to look at what is the kind of break-even point and how up you are, and then how much of volume and how much of price. So though the management is telling that when prices will stabilize, business will be in better state, I don't know how better state depending on at what margin they are doing a break-even. So I don't consider this kind of price even stabilizing will really help the business to go back to the old kind of numbers. The second thing, Indian demand keeps on growing and outpaces the supply, which means this is the good thing. So all of this has happened despite PVC demand growing at 20% plus rate. Imagine if India में थोड़ा recession आ गया और ये number demand का घट गया तो क्या होगा? So despite of 20% plus PVC, this is the situation. And there are projections that this will grow at 8-9% and whatnot. So let's say if the demand keeps growing, then maybe, and you don't have new supplies coming, then again you stabilize. Third is government puts again some regulatory measures. So 2015 to 2021, we had these anti-dumping duties. If government comes back and puts it, then business comes back to normal. That means we are putting money in a business which is at the mercy of government to make money. And who has again ability to predict when government is going to put some kind of anti-dumping duty. Fourth is stock becomes so attractive that even in the worst case scenario, it looks attractive, but may test a lot of patience, which in this kind of market we will not have because a lot of other things are running and all. Now, my ability to predict these things by which we can know the business will revive. Red means I don't know how to predict it. Yellowish means I have some way to deal with it. And green means at least when it is apparent, valuation is in my hand, margin of safety is in my hand. Let's say the whole business goes less than one price to sales. You buy it with a 5-year view that someday fate will turn and then you sleep over it and maybe you make money. But still you will need a lot of patience and you will need some good cycle to play out. So that is the situation this business is. So just because something has corrected 50% or just because some momentum is building up, see many times we know Jubilant in Gravia में भी momentum आया था, momentum तो आकर टूट जाता है. So technical is also not something which is 100%. So you have to go with stop loss if a momentum is building. So what are the risks? So again, I'm opening for discussion. What are the risks you saw in this business? So my understanding, and good, you highlighted a lot of risks. See, one risk, product concentration risk. This is big risk, just 2 products. And this product concentration risk playing out in a industry which is super cyclic. So the Chinese real estate industry, it started all of this. In India, the real estate is doing really well. In China, it is doing really bad. So the good things of Indian real estate industry didn't matter. That is why 25% demand growth rate and still this is the situation. So we think only in terms of demand, but we also need to look in terms of demand in the nations where the supply lies. Regulatory risk, the moment that ban went off and China's economy, real estate suffered, all dumping. So if government tomorrow again puts anti-dumping duty, things can change in one single day. But these are times when we don't give weightage to the risks arising out of government business or out of regulation. This business is hardly related to government regulation, but the single factor anti-dumping duty can change price, can change everything. Global supply chain risk, the biggest risk in chemical. We don't understand the complexity of this. This is such a beautiful example of global supply chain risk. No barrier to entry in monopoly business. How do we define monopoly? We, ये Twitter पे जो share होता है, 70% market share monopoly business. Even monopolistic businesses can suffer. Again, this is a great example. You have to understand the detailings of monopoly. So if there is enough, if nobody can even produce it, then it's a monopoly. But if many are producing it in different geographies, but today we are not supplying from there, we need to always think, is it possible in the future? The macroeconomic risk, what is started in China, the demand storification. So demand storification again in bull markets many times, or when the sector is in momentum. अभी वो हर sector में यही होता है, और one who enters late, he is the biggest sufferer, or one who enters just after it has fallen because of recency bias की 10% गिर गया अब ले लेते हैं, just because he has seen huge money. Because वो जो demand का storification होता है ना, when there is a bull market and everybody is involved in it, me, you, everybody is involved in it. But that demand storification, ultimately that reversion to mean is a big reality. I mean, आप 50 साल का डेटा उठा के देख लो कि सेक्टर बाई सेक्टर यही हुआ है. 95% of things go reversion to mean. The structural titan stories and all that happens in only 2, 3, 4, 5, 6 companies. The growth runway risk, वो जब भी कोई सेक्टर 1 साल 2 साल चल जाता है, then the whole story, long growth runway and all of that. I am taking this point because in another group, I remember commenting about somebody who told in 2021, some fund manager is telling there is a 10-year growth runway and all of that bullshit. Overvaluation risk, can't stress more. Whenever we pay high value, maintain stop losses or be ready to face the brunt when things go out of favor. And last, which I also missed, is lack of data, lack of tracking history. That is a risk which usually I put in all the presentations whenever I discuss an IPO company. So these were the kind of risks this business I found. But today, given all of this, What should you do with this such a business? Hi viewers, few months back we received SEBI license for research analyst services, and we are planning to launch RA services in the next year. We are planning to conduct a Q&A session where we are going to inform about the features of the services and any questions which somebody is interested in services will have. If you want to attend the Q&A session event, there is a form which you need to just fill, providing your details, and we'll send you the invite details. The form is there in the description box. Please click the form and fill the form. The event is on 10th of January, 10 a.m. when we formally launch it with the Q&A session. Also, the most important point, there is an exclusive launch discount which will be valid only for that period. So do look at it if you're interested. So I hope this video helped you to understand why exclusion is more important than inclusion in the market. Why at times we need to live with uncertainty and we may not have all the answers. So if we are interested in a particular stock, irrespective of after all this analysis, whether we find risky or not, or attractive or deep value, there are times when we need to live with that uncertainty with certain questions remaining unanswered. That is the nature of equity market. And many times there will be questions which will have no answer. I mean, somebody can give an answer, but the credibility of answer and the chances of that answer being right, nobody knows, because when the promoters can go right or go wrong so many times, in such a big manner, it's very difficult for people at the last leg of information to have those answers. So I hope this video helps you to improve your, buying and not buying framework. So again, Merry Christmas and wish all of you a very happy New Year. I will see you again in the next video. Thank you.